Joining me now is Richard Bernstein, CEO and Chief Investment Officer at Richard Bernstein Advisors. It's good to see you, Richard. Just bring us up to speed. What have the small caps been doing since last Wednesday?
They're doing well, but they're certainly not keeping up with the more speculative stuff, which is done very well. Even cryptos have done well. So that should be a warning to the Fed that maybe they didn't need all this liquidity because it's not going to productive use.
Okay, so let's build on this. As a small cap devotee, or as people who want to see, the rise of the rest in the U.S. economy, so to speak, this is not the reaction that we would have hoped for?
Well, I think, Kelly, the reason I think that we're such big bulls on mid caps and small caps is that that's where the earnings growth is forecasted to be, right? By the end of this year, early next year, we're going to find that small caps, at least the forecast right now, we're showing that small caps are going to grow at a multiple of what, say, the Magnificent Seven are going to grow at. Now, that's not unusual, right? When profit cycles trough, smaller companies have greater sensitivity to that upturn in profitability. But as you pointed out, what's very unusual here is that the Fed is actually easing into this accelerating profits environment. Normally, they'd be tightening. So, some of the comments that people that you quoted before, profits are the lifeblood of employment. Profits are the lifeblood of investment, capital investment. And so as profits rev up, we should see normally the economy just get stronger naturally. Now we've got the Fed easing on top of that. That's like putting fuel on the fire.
I'm going to ask something that I kind of can guess your answer. It would be out of character. But is there anything in this reaction function or the chart we just showed, which has the mega caps beating the smaller caps 2-to-1 year to date? Do you think, you know what, forget it. It's time to just load up on the Mag 7 and off to the races into year end?
Well, I mean, certainly there's a lot of managers doing that. The data show that that's what's happening. I mean, we are fundamentally based. If you're a momentum manager, I get it. That's where the momentum is. And if you're a momentum investor, I get it. That's where the momentum is. If you're a true fundamental investor, though, it's hard to argue that the Mag 7 are justifiable investing in them now by fundamentals. They're slower growth and more expensive than other parts of the market. In other words, other parts of the market are cheaper and faster growing. So, his history says that's a good combination, cheaper and faster growing. We'll see if that actually happens, but history's on our side.
If we see gold up, crypto kind of taking off, the big tech momentum trades outperforming the rest of the market since the Fed move, I mean, really, what does that tell you? That they shouldn't have gone 50?
I think, well, I would separate out a little bit about gold versus cryptocurrencies there. I think they're a little bit different. I don't think you're finding, there's economic use to gold, industrial uses and things like that. They're the only economic uses for Bitcoin are really for illegal purposes. We can't buy a cup of coffee with it or anything. So I think there's a difference there between the two. However, if we do see a big speculative fervor come into the marketplace, I think that's a very bad sign for the Fed. My argument has been for 20 or 30 years now that excessive financial asset inflation is as damaging to the economy as excessive real asset inflation, which we would call inflation. Right, we call excessive financial asset inflation, we like to call them bull markets and everything. But bull markets in extreme become very speculative and they become bubbles. That's not healthy for the economy either. And the reason why is because you get a gross misallocation of capital within the economy, and that causes inflation. In other words, you allocate capital to things you don't need, I would argue cryptocurrencies, and you don't allocate capital to things you do need, like the electric grid and things like that. And so, I think the Fed has yet to truly understand that excessive financial asset inflation can be inflationary as well.